have mortgage guru Bill Payne here to talk about everybody's favorite subject, money, rates,
honey,
all the stuff. Welcome back, Bill.
Thank you for having me.
Thank you for being here.
Our most regular guest.
Yes,
Yeah.
who said he he had nothing to talk about.
Do I get a gold
Mike,
sticker
you
for
need
that?
like a 5-timers jacket like they have on SNL.
Really?
Yeah.
I'll wear
we
one
need to
next
get
time.
you a
How
very
about
nice.
that?
No, it's a gift from us. I'll search. We'll consult with your wife because she
Thank you.
always picks out your best clothes.
Seriously. Okay. Bill, so when you came in, you said you had nothing to talk about. So I want to start with that.
Okay.
Because we have stuff we want to talk about.
We're just going to take a moment of silence.
Yeah. Why do you say? Because nothing is different from...
It's like Groundhog Day.
Okay.
In the mortgage world.
Okay, so it's been like that for what, a year? Okay, so right now we're in May 2024.
Yes.
It's been about a year.
Yeah, it has. And so we're just waiting on something to change. Maybe the Fed finds something it needs to act on and be less restrictive, and that'll change my world. And it probably change everybody else's world at that point in time.
But no indication of that right now.
Nothing new.
And so how much is a 30-year mortgage averaging now? Like where are the rates right now?
It's volatile. It'll be 6.5 with no points one day, and then it could be like 7.25 for one day. So it just moving like a ping pong ball.
So do you pray or like what do you do to... Okay.
I drink.
He drinks about it.
Yeah, I mean, come on.
Okay.
So remind people when they're getting a mortgage, like when they lock it, is it just like, hey, we've got to lock in today because it's down to 6.5 and tomorrow it could be back up to 7, or let's just wait let's wait as long as we possibly can? They depend on you, I know, but...
Totally. So it all depends on how quickly they got to close. If you're within 30 days, the risk reward usually isn't there. You need to lock. Unless there's tailwinds and they're trending down, which is kind of rare. They're generally trending up at the moment. But based upon that kind of between 6.5 and 7.25, if they're close to 6.5, I'm usually saying, let's lock. Why play the game and wait on something that will eventually come, we just don't know when. And that's the Federal Reserve choosing to start to decrease the Fed funds rate, which in turn will lead to lower mortgage interest rates.
And when's their next meeting? Is it June?
I should know that.
It's okay.
Yeah, no, it's June.
Yeah.
So the expectation is they may start to decrease the Fed funds rate in September.
Yeah.
May.
So in January, the goal was to be back closer to 5% by the end of the year. And
Totally.
we're way off that because
Yeah.
they're not going to drop that drastically.
No, there's no way.
I mean, like we'd be lucky to get to 6 by the end of the year.
Yeah.
Yeah.
I don't know what'll come. I mean, there would have to be some really bad economic news.
Which
And
we've
then-
had over the last week.
Yeah, well,
Jobs
it actually
report,
is in
consumer
line
price
with
index.
expectations. So it wasn't like, oh gosh, shit's hitting the fan. So, but it's the first time it's been in line with expectations versus being higher than
Right.
expected. I think the circus of the presidential election will throw a curveball and all that.
What a circus it is.
It will be. So get your popcorn ready, watch
Yep.
that. And that could, unfortunately, be favorable for mortgage interest rates. Maybe bad for the economy.
Yep.
So
Yeah.
we shall see.
Yeah. Volatility is...
Yeah, not what Wall Street wants.
No, but you're right in that negative news is good for rates.
Correct.
So it's kind of a catch-22.
Yeah.
It's bittersweet. Okay, what next?
I don't know what y'all are talking about. I just got back from France and I want to go back because this is all...
What was your favorite wine?
Oh my, I don't know.
All of it?
Yeah, I had so many bottles. Okay. So no, I want to talk about how everyone thinks they're rich.
They are.
So everyone thinks they're rich because they have so much equity in their houses. So we're getting questions a lot. And then everybody wants to be a real estate investor. Okay.
Right.
So, I'm getting questions like, bought my house a couple years ago. Obviously, I have a lot of equity in it. How do I pull it out and buy something? I want to talk about how realistic that is, generally speaking, okay, because we don't really have like numbers that we're working with here. but like, what are the things that are 101? You know, you own the first house that you've bought and you think you're very rich now, and you need to know what a down payment is and the things that you have to factor in that they're not thinking about when they're contacting me and being like, I have $200,000. Let's like go buy some shit.
Fair question. All right. So to make any kind of cash flow or not lose your ass on an investment property, you got to at least put 25% down. That's where it starts.
That's
Anything
terrible
more,
news number one.
Okay, yeah. So if you've got $100,000 in equity in your home, you're not going to be able to exercise all of it. Probably about 50, maybe 75,000 at the most. And then you back that into, okay, what does that get me if that's the 25% I'm using? Well, it's not much house here in Charleston.
Nothing in Charleston.
Right on, man. So you can access that equity, and it's great. I don't know if it'll be enough, though, to allow you to go buy an investment property. And then there's the upkeep, the headaches. And if you're going to use a management company, they'll get their cut. So it's a great thought. Real estate's a wonderful investment, but there's a lot more to it. And it all starts by looking at the numbers. How much equity do you have? How much can you get access? And then does that allow you to purchase something that will rent roll?
Also, your rate when you are buying an investment property is higher than primary residence.
Yes, and that's a good point. The mortgage is totally different. 25% down, the interest rate's going to be 0.5 to 0.75% higher than if it were primary. Interest rates are already high, so now you're definitely in the sevens right there. So that eats away at what you're going to make every month, unless you can really offset it with high rents.
Right. So I want to dream squash because that's what I'm really good at. And I do think that it's admirable that a lot of people want to own real estate. And I don't think that there's anything wrong with that. I just think that they get into it in a very naive way, and they need to understand that there is a lot that goes into it. And if they buy an investment property, if they buy an older home, that's going to have a lot more upkeep than a newer home. And realistically, you need to go in, and figure out what the numbers are. A lot of investors that I talked to, I had lunch with one yesterday who got a really great deal on like a quadplex. And he's like, we don't expect a cash flow for like 2 years or something, Yeah. So when you go in with that mentality, then I think you're okay. That's how you have to think about it, if you're buying in this particular market.
There are no deals in this market that I've seen.
No. People talk about them from time to time, and I don't know what they're talking about.
Unicorns.
Yes. Okay, now your question.
We had something come up this last week that I had to call you about because I don't know that we've ever talked about it on the podcast before, and I had never been involved with one before. But I have a seller who has an assumable VA loan.
Yep.
And I just did not know what that looked like. When you first hear it's an assumable loan at a 3.875% rate, you're like, wow, this is fantastic. It's going to really work out for whoever buys this place. But that ain't really the nuts and bolts.
It sounds great.
Sounds great.
Here's the problem. You can assume only that loan amount. So
in this particular circumstance, it was only $35,000 remaining on the loan.
Okay, yeah. And the house is selling for?
The house is listed at $260,000.
Okay.
So what you explained to me is that somebody can assume that $35,000, but unless they're paying in cash for the rest of it, the rest of that price has got to be a second mortgage, which is going to be a worse rate.
A higher rate, so you blend those two, and you're actually not winning in that scenario.
But other things about assumable, anyone can assume it. Doesn't
Anyone
have to be just
doesn't
a
have
VA.
to be a veteran. Yep.
Right. But in actuality, the higher the loan amount remaining, the more attractive it is. So if it was, a 90% loan to value.
Yeah. Here's the catch. We've gone so long at the higher rate with higher rates that anybody that's got a rate low enough or attractive enough to assume, they've got so much equity in that home now that it just rarely works out.
Right.
So,
And we've had a lot of people ask us to talk about this on the podcast, and talk about it in our sales meetings, like people on our team. But assumable loans are such a small percentage. I mean, I don't know what they are. It's less than 10%.
it's only VA loans.
Right.
So, in this market, yeah, probably 10, maybe 15, just because we have a military presence here.
Right. And then the other thing that I've heard is that the, I don't know, the logistics of it or the admin or something like that takes time.
Yes, it does. So the servicer of the mortgage, let's say Bank of America services that mortgage, they have to approve it. They have to sign off on
Okay.
it. And so there's that red tape involved. There is it's not underwriting in the same sense if somebody's getting a new mortgage, but they do have to look at their credit, their income, other checks and balances to make sure this person, this buyer, is worthy of assuming this loan.
So anyway, what I want to say about it is that it's not that it doesn't work or there's not an opportunity, but that really is, I mean, it's kind of the same thing as finding a good deal in this market. I mean, it's just very rare that you're going to find a scenario where you're really able to take advantage in a practical way that makes sense. And there's other stuff. I'm not going to get into it too much because I just don't think that it's just a huge part of our market.
Right. But in my situation with my sellers, the only way it's attractive to somebody is if they've got $230,000 of cash to put down, and then they're going to assume this remaining $35,000 mortgage at a low interest rate. And when somebody's buying a $260,000
They don't have
townhouse in
cash.
Goose Creek,
No.
they ain't sitting on that kind of cash.
Correct.
Yeah.
Yep.
So it's just, it was not marketable.
Bill, so I know you said that you didn't have anything exciting to talk about or whatever because everything is still the same, but I do want you to talk about what you're doing in terms of your business. So again, it's May 2024. Where is your business coming from? First-time home buyers, regular old people? What are the percentages look like? How much are people putting down? What are you seeing?
Okay, so people are now, because of life changes, selling homes. So I would say it's less, as a percentage, less first-time home buyers. It's 50-50. And the majority of those that are not first-time home buyers, probably 30 or 40% of that are people relocating here. So I'm not seeing as many people relocating to Charleston as I did 2 or 3 years ago. But I think people are now just like, gosh, I need more space or I want less space. Screw it, let's make this change. I'm going to be less concerned about what the interest rate is, knowing or expecting that down the road interest rates will decline. Not to where they were back in post-COVID, but they'll still be healthy, like 4s, maybe, or maybe 4s, definitely 5s.
Are they, when you say life changes, they're just like sick of their house and they're okay with the interest rate, or they're getting divorced?
All the above.
Okay.
I think a lot of people purchase homes and now are looking back and being like, I really, they just did it so quickly. They
didn't think about
it. Yeah. Maybe the location, maybe the floor plan, maybe their neighbors.
Yeah.
You know something interesting that I saw yesterday when I was looking at the stats in MLS is when I was on the housing supply statistics page, that the number of condos coming as new listings increased like 92%, which made me instantly think that all these people that bought second homes during COVID are either not using them or they can't travel as much.
Yeah.
Now that they're back at work or whatever, but those are coming like flooding.
Wait,
inventory.
this market?
I think it was a nationwide stat.
I think that's
Isn't
fair.
that wild?
I think it's also the cost of insurance, HOA regime fees.
Yeah, that's
And
true.
They changed that law, and they changed laws in Florida about, because the building that collapsed.
Yeah.
And so like they're having to dump all these condos because
Yeah.
people can't afford the assessments.
Yeah.
Y'all know how I feel about a condo. Okay. So that is crazy though.
Yeah.
I can believe it.
I can't remember if it was year over year or since last month, but
Okay.
It makes more sense that it was year over year, right?
Yeah.
It has to be.
92%?
Yeah, it has
That's
to be.
hefty.
Yeah,
Yeah.
that's hefty.
What other questions do we have for Bill? Bill, come
nothing,
on, give
man.
us something.
What has come up for you recently?
My son started driving.
You're kidding.
Yeah, man. 15 and a half, so he can drive during the day by himself.
How does that make you feel?
He's actually a pretty good
I know
driver.
but he's like a responsible kid too.
Yeah, he is, but
You get antsy every time your phone rings.
my wife definitely does.
Yeah.
Yeah, so that's been a new thing in our house, but he's got a tank of a pickup truck parked in our driveway, so I feel like if he does get rear-ended, he'll be okay. But
Oh, I bet that was fun to pick out.
yeah, that was.
Was it? He wanted a truck.
He had no idea what he wanted. Me and his grandfather went shopping, and we knocked it out in one day.
Oh
So
my God.
that was an experience. But
The Alabama boys getting him a truck. What color is it?
it's blue.
I bet he feels so cool.
You
in
haven't
it.
walked by my house lately,
No,
have you?
I haven't.
Okay.
No, I don't live in your fancy ass neighborhood.
Well, I
remember?
used to see you two walking out every now and
Yeah,
then.
we don't hang out anymore.
Oh,
Are you still driving the Land Rover? Did you
I
get?
am. I was told to get rid of it. So if anyone wants to buy a 2004 Discovery Land Rover with 68,000 miles, I've got one for
What do
sale.
you have to get? What are you going to get instead?
Whatever. I just want the right person to buy it.
Yeah. I was so emotionally attached to my Land
Yeah,
Rover.
you had
and I
like
could
a light blue one, didn't
yes, and I could give a shit about a car. Like, I
Yeah.
still think about that car every day. And when I see yours, I'm just like,
Yeah.
oh my God.
you? Yeah.
What is it about those
I
cars?
have no idea.
They're just the
man.
most beautiful things
For me,
ever.
it takes me back to like college.
Yeah. The glory days.
Maybe a couple years after.
When
Yeah.
we used to be like
life was good,
fun
man.
and happy.
Yeah, I could just listen to Widespread Panic all the time.
I know.
Okay, enough slacking off, you two.
Okay.
I thought of a question. I had a closing yesterday that you were the lender for. 25-year-old woman, I'm so proud of her, bought a $432,000 condo in Mount Pleasant, and I think she brought $96,000 to closing.
Yes, she
Wow.
did.
Yeah. So talk about the importance of, and I say that because when we were going over the numbers, like it's the lowest monthly payment I have seen in a closing in a really long time. It was, less than $2,600 a month. And I know that's because she put so much down, but talk about the importance of putting down more money.
Hugely important. One, you need cash down just to qualify, but more importantly, that will allow her to retain some savings month over month. So, and the cash down, I would say, especially for first-time home buyers, it's routinely coming with assistance or all from family.
The parents
Yeah.
or whoever.
And I will say this girl, it was not,
Yeah.
this woman.
Yeah.
She made a lot of money in Bitcoin and she has a really good tech job.
She is super smart.
She's super smart.
She's an anomaly.
Yes.
And I applaud her for that.
Yes.
But yeah, I think a lot of that with the parents contributing, the parents may want that money back, and they'll get it back. I mean, that's the beauty of real estate here in the Charleston market. But I routinely see first-time home buyers with monthly mortgage payments of like $4,000 to $6,000. That's a lot.
That's a lot.
Especially if you're like 27, 28, 32.
And how much of that is PMI?
That's taxes, homeowners insurance, principal, and interest. So that's all in.
But is PMI like a percentage of the monthly payment, or is it like a flat fee?
No, it's a percentage of the cost of mortgage insurance is a factor of your credit score, how much you're putting down, and then the loan amount. So it can vary. The most expensive, it's surprisingly inexpensive because that's a very competitive market. So if you're buying a $700,000 house, putting 10% down, your mortgage insurance is going to be around like $250, maybe $225.
What a waste of money.
It is. It is.
But if you don't have it,
yeah. If
What
you
are you
don't have
gonna do?
access to additional
Yeah. I
know.
cash, but
But
yeah,
do you-
it's a penalty.
But people who do have the cash and they're like, but we don't want to put all of our cash towards our down payment. Do you explain to them, like, do you give them both scenarios?
Absolutely.
Like, yes.
Finding that balance between what stresses you out and you being able to sleep well at night versus what you can truly afford, and having that deeper discussion about, well, what life changes are you going to have to make, maybe? What other things you need to be thinking about now that you're a homeowner, like an AC unit going out? covering the cost of water, utilities. So it's especially for a first-time home buyer, it's the first time they're making a huge financial decision. So it's not something you just need to do on a whim. And that's where I believe that first-time home buyers are doing a great job in reaching out well before they're ready to actually start purchasing, like 6 months. So it allows everybody, the whole team, time to help them prepare and make sure they're making the right life decisions there.
I have a question about that, and sorry to interrupt, but like first-time home buyers, how many of them come to you and they're like surprised that either A, they have shitty credit, or B, like how much things cost?
A, typically people know if they've got
they know
issues with their credit.
All right.
And it's good to come early because then we can start working on that. What was the second part? Oh, how expensive things are.
Yeah. Like they're like, I'm ready to buy a house. And then you're like, well, this is how much it's going to cost. And
a year ago, it was mind blown. Now I think people have come to terms with like stuff is expensive. They've heard enough about it. So I'd say it's 50-50 in that some of them are 25% are surprisingly happy. They were like, hey, it's not as expensive as I expected. Another 25 are like, oh gosh, this is a lot more expensive. And then 50% of them, surprisingly enough, are kind of like, okay, this is what I thought.
I think though that, I mean, people talk to their friends, right? So like if their friend bought a house and they're like, well, how much is your mortgage payment or whatever, you know, like I think that that's probably because things have been the way that they are in terms of rates for a year now.
Yep.
I think they're just more realistic about it because before, you know, when we went from our 3% to our 7%, and they're like, well, that guy's mortgage payment's only $1,000 a month.
Yeah. It's like shock and awe.
Yeah.
Let's take a step backwards and explain what PMI is and why.
Mortgage insurance is there?
Yes.
Okay. So I think technically it's there because some actuaries sat down and said those borrowers that put less than 20% down are X times more likely to default. So how do we protect Fannie Mae, Freddie Mac, the government, whoever backs the mortgage from these default rates, but not penalize every home buyer? And they said, okay, if you put less than 20% down, there's a cost of mortgage insurance that's going to help offset for defaults. It's just how insurance works. Now, that was a long time ago. In my opinion, I think it's kind of shit these days, but that is why it's there, and that's the purpose behind it.
You think it's shit because they don't default?
No, I think if they had to sit down and recalculate it all, that mark would probably move to like 15 or 10% down, and it wouldn't be as expensive as it is today.
It's just another way for them to make money.
Exactly.
But this is also
Absolutely
not a
is.
fee that you're stuck with for the life of the loan. Like most people can refinance it out of their payment, right? After maybe
Yes.
2 years.
Yep. You can use the appreciated value of the home if you've made 24 timely mortgage payments to get rid of mortgage insurance. You can refinance, and if at that point when you get the appraisal done, you've got 20% equity position, mortgage insurance is gone. So there's multiple ways to get rid of it, and it will eventually go away as long as it's not a FHA loan. You don't see a lot of that here, but FHA loans, the mortgage insurance is for the life of it until you sell that house or refinance to a different loan product.
Okay. Anything else we want to talk about today?
Anything else you want to add?
I got nothing.
Okay. Thank you so much, Bill, for coming on and telling us what's going on and what's not going on. And congratulations to your son.
Thank you. Thanks for having me as always.
Thanks so much for listening, guys. Don't forget to rate, review, and subscribe. You can find Bill on Instagram.
Bill W. Payne.
Bill W. Payne.
We
can't
do this
remember
every
it.
time.
843-532-1392. Best
Just
mortgage
text him.
broker in the entire world. And don't forget to check us out at Smith Spencer Real Estate and at Between Two Brokers on Instagram. And we will see you next time.